Hi, welcome to MyWealth.com, the tax video series. The more you know about taxes, the more you will save. I'm Bob O'Brien. I'm one of the senior instructors here at MyWealth.com. I've been a financial planner for 14 years. I'm a CFP, and I've been a tax advisor for firms like Ernst & Young and TI-CREF, and I've helped prepare thousands of tax returns. My objective for you today is to help you understand the tax return better. And I'm certain that this is going to maximize your return for, say, 2008 and also for years to come, which is probably even more important. So please be certain to ask any questions that you have. All right, so just looking at the 1040 here, this is a 2008 1040. We're going to break this down, especially this first form here in this video right now. The label, I think you pretty much take care of that yourself, name and social security number. We're going to go through filing status, exemptions, income, and adjusted gross income, which is above the line deductions. Here's a look at the second page, and this is where your itemized deductions will be. So you want to make certain that you're familiar with that as well. And we're going to talk about that in some of the other videos. Okay, filing statuses, which is from lines 1 to 5, and you can see that right down there at the bottom, the filing status. Pretty basic for the most part. Most people file either single or married filing jointly. Be aware that there are other ways that you could file. You could be head of household, married filing separately, and a qualifying widower. If you don't file properly, if you file for something like head of household or something like that, it could literally cost you thousands of dollars. So if you think you might be off the conventional single or married filing jointly, make certain that you pay real close attention here, and you also have some follow-up questions for me where we can do a little research and make certain that you're filing properly. Married filing separately, very rarely does it make sense for someone to file married filing separately. It might in the case of medical expenses and things of that nature, but for the most part, married filing jointly is going to be the way that you want to go. But I do want to mention that here. And it also can bring in some state problems and other things that are involved. A lot of this has been used in the past just to get people to use, whether it be a certain tax service or so forth. It might be better for you to file married filing separately, but usually it's not. Usually you're better off filing married filing jointly, but there may be some instances where it does make sense in the case of high medical expenses. Qualifying widow or widower, this is if your spouse passes away. It allows you to file married filing jointly for up to 2 years after passing, as opposed to filing single. You then must remain single and also pay over half the cost of maintaining a home for a dependent child. So again, if you think you might be under this, if you had a spouse that passed away recently, you definitely want to make certain that you're taking advantage of this status and knowing it, to make certain that you can do it, because this will literally save you a lot of money for filing the proper way under qualifying widow or widower. Head of household, if you're single and you have a dependent, could be a grandchild, a parent, or you could provide half the support for someone you claim as a dependent. That may also qualify for head of household. So again, if you think this might be you, you definitely want to post a question to me, because it'll save you a lot of money by filing head of household as opposed to single. Okay, moving along to income. Income, for the most part, is pretty basic for most people. Wages, interest, dividends. Can be losses from a small business or investments like lines 12 or 13. There are other things in here, but I mean, this is really just everything. I mean, if you take a look at this line, and I have the income section posted on there for you, you can see there's pensions, IRAs, capital gains, other income, which could really mean anything, tax refunds, which can be taxable, alimony received. So there are a whole bunch of different things, but most people it's just going to be wages, interest, and dividends. Exemptions, you literally subtract $3,500 in 2008. You subtract that from your taxable income just for being you. Spouse and children and anyone deemed as a dependent would be another $3,500. So make certain you know the rules and ask any questions for possible dependents. Obviously, if you're married and you have 2 children, right off the bat, you're filing a married filing joint return. You have 4 exemptions, because essentially there are 4 dependents on you and your spouse's joint return. So most cases this is pretty straightforward, but there can be cases when you have a grandchild living with you, you adopt, and things of this nature. And that's where you want to dive into the rules a little bit further, post a question to me, and we'll make certain that you're filing appropriately, because every additional exemption you have, the more it's going to reduce your tax liability. And you also might want to just take a look at line 42 on the second page of your 1040, and this is where it carries over to actually reduce your income. So take note of that, because it's important that you understand your form well in order to maximize your deductions and plan for the future. Adjusted gross income. So this is right at the bottom, and this is what they call above the line deductions. And the line is going to be right at the bottom of this line to account for your adjusted gross income, which would be right on line 37. Anyone can take these deductions. You don't have to itemize. And this is just continuing on adjusted gross income. More popular ones would be like moving expenses, traditional IRA, student loan interest. And again, line 37 and 38, that would be the line. So any deductions above this line are called above the line deductions. So anyone can take these deductions. These are important deductions. In some cases, these deductions are better than itemized deductions, where you would have taxes and mortgage on Schedule A. And we're going to take a brief look at that as well. Line 39, extra exemption amounts will only apply to a small amount of people, and perhaps only. So this is just after above the line. All right, itemized deductions on line 40. Who should itemize? If you're single and your itemized deductions exceed $5,450 in 2008, then you should itemize your return. And of course, you want to be familiar with all the rules. And some of the next videos that we go through are going to go through this in more detail, so you know whether you or not you should itemize. Married, your itemized deductions exceed $10,900. So if your itemized deduction exceed that amount, then you want to itemize your return. If it's less than these amounts, then you want to just take the standard deductions. And of course, the standard deductions are these amounts: $5,450 if you're single, $10,900 if you're married filing jointly. And here's just a look at the itemized deductions, and we're just going to go through them real quickly. Medical and dental expenses, taxes that you pay, such as local taxes and property taxes, interest you pay, gifts to charity, casualty and theft losses, job expenses and certain miscellaneous deductions, other miscellaneous deductions, and of course there can be a phase out at the end. And I go through all these and I break these down in other videos, so you definitely want to take advantage of that and enjoy those. I want to thank you for being here with this section, really just the first page of the 1040. It's important that you become intimate with your 1040 and you understand it. You understand what's going on. You don't need to know every nuance of the tax laws, but you need to have a bird's eye view of what's going on in order to plan properly for the future. Thanks for taking the course. I look forward to your questions. Make sure you sign up for our blog at www.mywealth.com/blog if you haven't already. Thanks again.